All right, guys, here we go. We're going to be doing journalizing and posting transactions. This is your lecture summary, okay? So just to remind you that we're going to analyze the transactions, remember, using a source document. The document can be either an invoice, a receipt, which you should save your receipts, by the way, a receipt, an invoice, a calendar, whatever the case may be, your documents, and then your chart of accounts. Now, your chart of accounts is just that, your cash, your expenses, your capital, your withdrawal, your accounts payable, your revenue, where you're getting your money from, your accounts receivable, if you had that. That's what we're talking about is chart of accounts. And some of them have their own numbers as well. Okay. Then what we're going to do is we're going to change them over to the general journal. That's what we're going to be focusing on this week. Then after we do the general journal and we journalize what happened every single day, then we put them into the general ledger. In the general ledger, we're actually going ahead and posting them to each individual account so that we can then begin to look at our trial balance and get those balances. And if you're wondering, where do those balances come from? They come from the general ledger. Once we get them from the general journal of the daily transactions, everything that we've been doing, then we put everything into the trial balance so that we can determine what's been going on. Okay, so that's what we're doing. So then we go ahead and we look at, again, our chart of accounts. This is what we're talking about, okay? So assets are going to be beginning with a 1. Liabilities begin with a 2. Owner's equity begin with 3, okay? And you'll have things like cash, accounts receivable, supplies, prepaid insurance, um, delivery equipment. Those are things that are tangible that you can see and feel, and or things that are owed to you, like accounts receivable, money that is owed to you. Then you have your liabilities, which again, things that you owe, that the owner owes, okay? And then your capital account and your withdrawing. Please remember that withdrawing is where the owner is taking money out, but because it is not a operational expense, that's why we call it a withdrawal. He's taking money out. Some people call it still drawing. I like to call it withdrawal, okay? Then you have your revenue, your delivery fees. Anything with a fee, of course, is going to be where you're getting your revenue. And then your expenses, of course, usually start with a 500 up to 599, depending on how many um, accounts you have. We're looking at Mitchell's delivery chart of account. So when we do the journal, again, it's a day-by-day listing is what I'm talking about. And the transaction should have a date, title, amounts, and a brief description. So when we're talking about that, you're going to see this. Let's explain this. So on June 1st, uh, Mitchell Williams opened a bank account for his business. All right. So this is what we're going to do. So here we see June 1st, 20 whatever, 20,000, 2020. Date 1, debit cash for $5,000, credit capital for $5,000. This right here is the explanation of what happened. You need to have an explanation along with your receipts so that on a daily basis, everything is fresh in your mind. You can say, okay, this happened, this happened, this happened. But 5 days from now, or even with some people the next day, they're like, what was this for? So again, you have to go ahead and make sure that you journalize on a daily basis to remember everything that was done. This is what happens with a compound entry, okay? Here we go. We bought delivery equipment, okay? Here we go. You debit delivery equipment for $1,000. We went ahead and we decided to put $700 of that. That's from chapter 3. Remember that? $700 on accounts payable. And then we paid $300 from cash. So you debit your equipment and then you credit your accounts payable and your cash. And notice here it says that we purchased a scooter with a down payment, balance on account with big red scooters. Again, a description of what's going on. So what we're doing again is we're lining up all the debits and then we're putting in the credit. So here we go. Somebody went ahead and gave us cash for $900 and the rest are going to pay us out for $2,600. But delivery fees, when we put that money in for the month, is going to be the entire $3,500. Okay? Because it's happening during that month. It doesn't matter whether they paid you all of it or not. The fact is that you made that money during that month. Okay. The general ledger is similar to the T accounts. The only thing though is it keeps this running balance. Remember on the T accounts, it had a footer or a footing with a running balance. That's exactly what we're going to do. The only difference is that we're balancing with the T accounts. We were balancing after everything was done. Here, we're going to be balancing after each transaction. So for example, okay, let me make this just a little bit bigger, hopefully. Here we go. So with the T account, see what I was talking about? Here we go. We're doing everything and then we get the balance at the end by subtracting the 999,000 from 9,430, and you end up with a balance of 470. Here on the general ledger, okay, this is the cash account. It has the 01, a 101 account. Here you're putting in the debit. We made this on the first. We put the money in. On the third, we took money out. So now this is your running balance right here. 2,000 from 5,000 leaves you 300. Then on the 6th, you took another $600 out. So guess what? You only have $2,400. Then on the 6th, you also deposited $2,100. So now you have a running balance of 4,500. The reason that you want to do this and put this in the general ledger, posting it to the general ledger, is so that at the end of the month, instead of trying to figure out what the balance is, you have a running balance each time, and you will refer to the general journal to determine those amounts as well. And you still end up with a balance of $470. Okay? But it's detailed so that you don't have to do all of this at the end of the month with each account. Okay? So then the next one, of course, is where we're posting it. Like I said, we enter the date of the transaction, debit or credit, enter the balance. We're getting this information from the journal page. So this is what we're talking about right here. This is the general journal, right? $5,000. We're post reference 101. This is the account that we're getting it from here, the account number, right? And we're putting in the journal entry. We're taking it from general journal page 1. This is your first page. So you put 5,000, general journal 1, your 5,000, and of course your amount. Okay. So again, this is how it should be done. Am I going to take points off for that? No, I should, but I'm not going to at this present time. Now, we take all of those running balances at the end, right? All of those that we had, and we then put them into our trial balance. Now, what we do though, as we put them into our trial balance, notice that we're getting all of the assets up to our equipment with a debit account. You're putting it on the debit side. Then all of the accounts payable and the capital on the credit side. The drawing, when he withdraws something, it's on the debit side. Your fees or your revenue is on the credit side. Your expenses on the debit side. But either way, all of these numbers that are here, when added up and totaled, should balance with all other credits. And that's exactly what accounting is, accounting for every single penny that goes in and out of the company and balancing out at the end, okay? Making sure that every transaction, everything that's been done gives you a balance where you actually balance out. And here we go. Even though it balances though, it may not be correct. So you have to make sure that everything that you're doing in the general journal is correct. That it is 470, not 490. That you are adding and subtracting correctly. Because there has been times where you can balance, but it's not the correct balance. That's why in accounting you have to check and double check to make sure that everything is in its right area. Usually you won't balance, okay? That's usually. And then you have to go back to find out, why am I not balancing? But here, even it is, you have to be very careful in preparing your general ledger accounts and making sure that you've got the correct running balance, okay? The tips for finding errors, again, review your balances, go over your amounts, go over these adding and subtracting. Find the difference between the debits and the credits. Make sure that if there's a specific transaction that you're figuring out. Let's say that it's off by $100 by subtracting both balances. You go back and figure out, okay, where could it be? Where could I have had either $100 more than I entered or minus $100 that I didn't add? If you can divide the difference by 2, did you post it twice? Check it. Did you post a debit as a credit or vice versa? So make sure that you're checking this as well. Again, review your balances. Then, of course, you're going to go ahead and if it's divisible by 9, you have a slide error or a transpositional error, meaning that it's not correct, meaning that you have things like if the example was supposed to be 250, you recorded it as 25. Or if it was 25 and you recorded 250, that's a huge difference, okay? The difference is evenly divisible by 9, then of course you've got a slide error. A transposition error, again, is where, again, instead of it being 250, you're putting 520. Be careful. If you're dyslexic like me, be careful with your numbers, okay? Be careful, make sure that you are putting the correct numbers in and check. If the tips don't work, again, go back, trace all your postings, trace everything, make sure that it's correct. Even go back to the book to make sure that you read everything correctly as far as what you were supposed to account for and which accounts you were supposed to be working with, okay? In accounting, erasing is not acceptable. You have to make a correcting entry. Let's say that you were supposed to put you were supposed to put $250 in accounts receivable, but instead and it was delivery fees, but you put it into cash. Now your cash is over by $250 that you don't have. So instead of erasing it and saying, oh, I got to put this in AR, no, you have to reverse the entries, okay? You have to make a correcting entry. So let's say that you put in the $400 for rent, and it was incorrectly debited to a repair, okay? But correctly credited cash. Either way, you took the money out, which is fine, but you put it into the wrong account. So what you would do is rent expense, okay? You would debit rent expense, credit the repair expense to take that money out, 400 and 400, and then you would 400 and 400, and then you would add the explanation to correct the error in which payment for rent was debited to repair expense instead, okay? Where you have to be careful. Always make sure which account you're actually putting it in, all right? And the reason that we want you to understand this, that you can't erase, is because later on you'll be taking ACNT 1311, which is your computerized accounting. At computerized accounting, you'll be using QuickBooks. Well, you can't erase in the software. You'll have to instead be able to go in and do a reverse entry like this, okay? So this is your basic summary of your lecture for what we're doing in chapter 4. I'll be going over the demonstration video. Please make sure that you do finish the demonstration so you can turn it in. Come on, guys. It's an easy 100. Do it, okay? Plus, it'll help you go over the concepts and understand what you're going to be doing for your assignment and your for the assignment that I have there posted for you, okay? And I'll talk to you guys on the flip side. Don't forget, if you need to get a hold of me, you know how, Google Hangouts or an email. If you need to personalize it or if you need to get me and just talk to me through Hangouts or on the phone, God forbid, but if you're going to call me through the phone, make sure that we make an appointment so I'll be ready for the phone call. All right? And I'll see you guys on the flip side.